Hello everyone, welcome back to a weekly review of my data. Now before I start this video, talking about the data for this week is going to be very short. However, I have a lot to say about my actual model and more of the inner workings of it. But first of all, the government shut down last week and it still hasn't reopened. That means all the economic news that were due to employment and inflation we were supposed to get the unemployment rate that was delayed to this week, and it's been delayed once again. The market really isn't moving that much. 2025 model was non-existent, so I didn't have any trades there. I didn't even look to trade it, and well, because I only trade it with news anyway. But even if I would have done like no news trading, it wouldn't have been present. So at least I don't think it was. There was one win on NLP that I took, and that's the only a 3.08 trade, and that's the only trade I took this week. There was another. Should have been a loss. Sorry. There was a loss. I didn't take this because 8:30 was opened above midnight, and I only looked to sell when that happened. So when at 9:25 we were beneath midnight, we had flipped over on the other side of midnight. It's no longer a viable trade, and I'm just journaling it for the data, just so that 10 years later I can look back and prove that that rule does actually make you money or make you more profitable over the long run, but or over the set number of trades. Let me go to the table. So the expectancy, if we remove the scenario that here, simply one trade, expectancy is 3.08. Very simple week. Now, I went back this to 2020 because I only have for this NLP model data for, if I show you, I only have data for 2023. That's like mainly what I back tested. And we're just gonna look at, oh my goodness. There you go. Alright, we're gonna remove all of these news here, or all these scenarios. So in total, the model in the last 2023, 2024, and 2025 pays you about 0.54 on every trade, 97, 213. Oh, sorry, there is some other, I don't know why the range rule is, remove the range rule, sorry, 0.67, that's better, 96 and 188. So that's about, I don't know what that win rate is real quick. Do I have my calculator? Nope, I don't know where my phone is. Let me just see that win rate. Got 96 divided by, I can't do parentheses. 96 plus 188, 284. So 96 divided by 284. Win rate is 34%. So 34% with something that pays you 0.67 is really, really good. I know a lot of people shit on low win rates, but this is the simplest model that a baby could follow, and it pays you, if you on average 2 to 3 times a week, it shows up 0.67 each time. No matter if it wins or loses, you expect it to pay you 0.67 times of whatever you're risking. That's pretty good. So in terms of according to professionals and industry standards. But anyways, I went back to 2020 because throughout this backtesting I noticed that oftentimes it would lose when price is not volatile. When we have those days that more so consolidate or tend to seek the equilibrium of the day and kind of like consolidate around there. Those trades, sometimes they occur and they really prove to have long lines of losing streaks. And so I went back to COVID because COVID was, obviously it was a lot of volatility, and I was able to look at something with the VIX. So this is a PDF that ChatGPT made me using half a year of data. I'm going to keep backtesting the rest of the year. But I want to go to a chart here I have of the VIX in 2020. So using this PDF, my hypothesis, the model assumes that performance improves significantly during volatile conditions and deteriorates when market reverts to equilibrium. It seeks to exploit directional volatility expansion across the first 3 major trading sessions of the global day cycle. All right, and you can see here in January I was somewhat profitable. In February I was also just a bit of profitable. Now these were months that were very slower, not as volatile, but still good, volatile enough to be profitable. And almost all months have the same number of trades too, except for May. So that's another good thing. Sorry, voice crack. The win rate is more or less the same. February should have been a better win rate and better expectancy because at the end of the month it started to move a lot because of COVID. But my stops were way too huge, so I just didn't journal those trades. I should have though, but it would be more so in line with what January is giving. And then March was a really good month where volatility exploded, closer to the volatility we've been seeing this year and last year on the charts since Trump got in with all these tariffs and everything. So this is more in line with what the model is more showing today. And I had to double my stop size to 40 points. And then we saw a lot of volatility, 50% win rate, a really, really good month. And then April and May were really bad. May especially was very poor. No wins in May. 1 win in April. And then June returned, with really good profitability. Same thing with July. Not as profitable. July looked more like a February and January. And then I haven't back to sit anymore since then. So the other thing, before I get that, so this is the VIX, right? You can see the VIX was stable and we had profitability. As soon as it exploded, it became very profitable. That was the period in which it was very profitable. And then March came around. We had 1 win in March. You can see how it just declined pretty heavily. It really just went down almost all month. And we had another aftershock of COVID. So we had another big rise in the VIX. And we had a really good profitable month. And then back to normal in July, and it's stable. So I could probably expect September to be giving me good results, and then maybe more stable results. October to give me good results, and then I'll probably expect November to give me maybe a losing month, and then December to be an okay month. So I don't know. I'm gonna keep back testing. I'm gonna see next week. I'm gonna come out with the results. But so far that seems to be the pattern. And what does this say about the model? Well, obviously it's not random. if it can correlate with, if the results of the model can correlate with the VIX, I don't think I have enough data to prove that, but I've seen it enough times with my own eyes to know that it'll probably be the results that next week we'll see. But if I can find 2 to 3 years where it's constantly showing overperformance when the VIX increases and underperformance when the VIX decreases sharply, right? And baseline performance when the VIX is stable and just moving sideways, then it would be hard for somebody to look at me and say, yeah, no, this model is random. Like, what if it doesn't work in 2 years? No, because it literally, the results are tied to how much money's flowing into the market, which is the core fundamental principles that the model was first off based on, which is accumulation, manipulation, distribution. And it would make sense that the more liquidity is in the market, the more money is flowing into the market, the more prices go on to accumulate, manipulate, and to distribute. This is how human psychology works, and this is how the algorithm is built to capture and to take advantage of that psychology so that the markets are more efficient. And I've been saying that forever, that's how I traded, but this is how I've now taken those concepts that I learned from ICT and now turned it into something that's super mechanical, that doesn't take much work, and that is real, based on something that repeats. So yeah, this drastically improves my confidence. This also gives me some ideas. So going forward, there's a few different things I could do now. If ever I see the VIX increase like it did just now, which is going to be very interesting, but we had a huge dump right in the market, And so if I see the VIX increase, I'm just curious too, by the way. We'll look at April and see if April was a losing month or not. So let me go back to that calendar. No. Well, look at that. April we had 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, 11, 10 losses. 1, 2, 3, and one of those wins. Well, okay, actually. Yeah, okay, so without the 1, 2, 3 wins, 10 losses, this is an unprofitable month. And then if I remove the scenarios, and we would have no trades in the first 2 weeks. 1, 2, 3, 4, 5. 5 losses and 2 wins, so just about profitable. All in all, I think obviously, and in March, 1, 2, 3, 4 losses. This is pretty profitable. 5 losses. This is still pretty profitable. 3 wins, 5 losses, about 4 hour net. I mean, so there's some correlation, somewhat of a correlation here. And obviously, the spike wasn't as big as it was in COVID. So it was probably amplified a lot more in COVID. But you could probably expected more losing streaks after a very sharp increase, or maybe 1, 3, or 4 loss losing streak after a very sharp increase in the VIX. That's right now what I think. So if we continue to increase here, if this is the beginning of another sharp increase, I'm going to start to up my risk, or I'm going to prepare myself to start to find a way to just avoid the losses, avoid the sharp decrease. Now maybe I could go and trade another market that doesn't see this much increase in volatility, something more stable, like maybe oil or gold. Well, gold wouldn't be a good idea right now, but actually gold maybe. Like, I don't know, that's the thing, is right now this is what I'm tasked to do. What do I do whenever I'm left in something like this and I start to see a decline? Obviously I don't want to sit here and trade through the unprofitable period. I could risk less until it starts to show more profitability. I could switch to a different market. I think right now it's best to learn how to avoid the unprofitable periods on one market before trying to see if I can integrate another market. But at least I'm going to start looking at other markets, so that when I do get to that point where now I've mastered that one market, I can start to add a second market, and yeah, I mean that's where I'm going to go from here. So anyways, I know this is very short. There isn't much talk about the actual trading this week because of the government shutdown, but this is why I'm taking the time to backtest and to gather more data. But anyways, with all of that being said, I hope everybody watched, enjoyed, and found this really insightful. I have a few people I know that are trading NLP model, and if you are trading the model, I wish you the best of luck. And I'm excited to come back out with more videos like this about the model and about my results next week. So I will see you all then.